Money and risk management is a topic neglected by many, but I strongly believe that as traders and aspiring traders, this is a topic that we should be really focusing on if we really want to be consistently profitable on the market. Well, trading psychology is also part of that, but we'll talk about that later in this video. So throughout this video, I'm going to be sharing with you how I manage my risk, how I'm able to close in the trades, and how I get most of my trades as winning trades. If you've been watching throughout this course, you realize that we've been closing all our trades in profit over 50%, 60%, 150%. Actually, in one trade, we actually closed more than 215%. I think that was class 10. So always go back and watch those videos in order for you to see how we actually trade. So there are a lot of factors that goes into money and risk management, one of them being leverage. So what I always tell people is to make sure that you're overfunded and under leverage, because that will help with regards to maintaining your risk exposure. Because remember, when we're trading on leverage, or when we're trading on the futures market, we're trading with debt, we're trading with borrowed assets. So which means that the higher the leverage, the higher the exposure to the risk, and that's what we want to limit as traders. We want to make sure that we're increasing the odds of us succeeding on a market and not being greedy. So this is money and risk management strategies that I'm applying whenever I'm trading the futures market, especially when I'm trading cryptocurrencies on the futures market. I'm by no means saying this should work for you. However, this is what I'm using whenever I'm trading the futures market. So what I've realized that my analysis on the market is in most cases very spot on. Again, I've shared with you in our previous classes how I analyze the market. Make sure that you recap on our previous videos. So if I'm predicting that the market is coming down and it's just going to continue going down like that, in most cases, applying all the techniques that I've taught you in our previous classes, the market will always do that. So if I'm intending to short the market right here, in most cases, the markets will never really, go up significantly. However, the market will always tend to move towards the direction that I've predicted. This again is based on sentimental trading and technical analysis that I've showed you in our previous videos. So assuming that we're trading ADA and we're trading an account with $1,000. So if your account is $1,000, again here, let's just use an example of 10x leverage. So a 10x leverage will give you a purchasing power of 10,000 US dollars, right? So whenever you're trading on your account, you realize that you've got 25%, 50%, 75 to 100. So these are percentages that are already pre-calculated for you, irrespective of which broker you're actually using. So what I tend to use is to actually only use 25% of my account. Instead of trading with the entire $10,000, I'm only trading with 2,500. So this is what I have at my sort of like exposure. So basically that means my trade here is only exposed to 2,500 US dollars. Again, my initial margin is $1,000 because I'm going with 10x leverage. And again, I'm not necessarily saying this is the leverage you should be using. If you recall, in our previous classes, we were actually using 20x leverage, but I'm using 20x leverage because I've been doing this for a while and I consider myself to be experienced when it comes to trading. So if you're just starting out, make sure that you're trading under 5x leverage. Again, not financial advice, but I just have to give you that point. So if I'm shorting over here with 2,500, let's say that I'm trading ADA, for example, and right here, ADA right now is trading around 50 cents. So it's going to be 0.5. So if I'm shorting here with 10x leverage and assuming that the price comes to 0.4, by the time the price comes to this point here, I would have then this account here would be an exposure of 2,777 US dollars. Again, because I still have to take back the rest of the funds, my profit here is sort of like 277.7 US dollars. So again, you can see that I'm now making 100% of the 25% that I was exposed to. If you recall, throughout all the classes that we've made in this course, all the classes, all the trades that we made, they were actually above 50%. So some of them will be 50%, 80%, 150 to even 200%. So you can see that it is very possible using my trading strategies. Obviously it takes time to actually develop a winning strategy. It takes a lot of back testing and really understanding the market, the current market, and the overall sentiment of what will most likely happen next. What sets you apart as a trader is that you must have an edge on the market, have the ability to see beyond what you see on the chart. So basically always have an idea where the market is headed next so that you can make informed decisions when you're actually trading. So this is the approach that I use when it comes to trading. Now you may be wondering, why do I only expose myself to only 25% when I have the leverage of, using the entire $10,000? Because I know that trading cryptocurrencies, if you're trading with support and resistance, in most cases, this support and resistance will be broken. So the support here sometimes will be broken. You find that it breaks before, going back up. So you may find that there's 2% over here, or maybe sometimes it breaks by 4% before quickly going back up, depending on which cryptocurrency you're trading, because some of these cryptocurrencies are extremely volatile. I've showed you in our previous classes, but I'll also make a class on that, on which cryptocurrencies are more volatile and which ones are more safer to trade. So because of this, I then take advantage of the rest of the funds. Maybe in this case I use 50% of the remaining collateral within my account. So I know that the market in this case may not just come here and then start going down. If the market breaks above this resistance over here before coming back down, I want to take advantage of the 50% that I have within my account to scale in this trade, right? So I want to scale the trade when the price gets to this point. So this actually makes sure that I'm not really exposed to a bigger risk, because in this case, whenever I'm scaling the account, my average entry price is moving from here to right about here. Again, that's why I'm using 50%, because when you're scaling, you need to be scaling with a bigger amount than your initial, or rather your first entry. So basically you may see this strategy as dollar cost averaging into a trade. So this strategy really works when you're really good with analyzing the market and anticipating where the market is going to go to. Again, we have no control whether the market is going to respect these support and resistance. It is for that reason that I tend to use the strategy to actually scale in on a trade, and only when the market really goes completely against me, that's when I actually put my stop loss and then accept the loss. But in my strategy, this seems to be always working. Again, this is not financial advice, and I'm not saying this will always work for you, but this is what works for me. In fact, I've shown you in my previous classes where I actually have a trade that is ongoing and I still have my limit order on top. The reason why I have my limit order is to exercise this thing where I'm actually scaling on that trade. So on the next trade that I'm taking, I'm actually using 50% of my remaining purchasing power to actually scale in on that trade, so that when the market comes down here, I end up actually making more money. So in most cases where I'm scaling the trade here, that's where most traders will have their stop loss. So instead of having my stop loss here, I will scale in the trade so that I can take advantage of the price as it comes down here. But sometimes the market will just go up and go completely against you. So that's why when you analyze the market, you really have to be almost 100% certain that the market is going to do exactly what you are predicting, so that you limit the risk of actually being, the market's coming to touch your stop loss or being liquidated at all. So that's the trading strategy that I'm using when I'm actually trading. In the next class, we're going to go in depth with understanding how to actually apply a trailing stop loss, because once you have this trade here coming in your direction, you want to make sure that you make as much money as possible by applying something called trailing stop loss, right? So that's what you want to do here by trailing stop loss. So trailing stop will enable you to actually take advantage of the price movement as the market keeps going down with your position. So click on the class coming up next and learn how to apply a trailing stop loss within your trade, so that you can take advantage of the price movement when the trade is moving in your favor. Because in most cases we close a trade too early, find out the market is still gonna continue coming down. So click the class coming up next. I'll see you there. Goodbye for now.